Dividend paying stocks across the board have had a pretty rough year-to-date performance so far that the S&P 500 Dividend Aristocrat Index is down 3.01% year-to-date. Now this is during a time where the S&P 500 is up 13.04% year-to-date. But with the most recent performance from some of the most loved dividend stocks across the board, there are definitely some massive potential opportunities brewing for investors that have a long time frame ahead of them like myself, and for investors not scared to weather the storm. Now in this video, we're going to analyze 5 different dividend paying stocks that are yielding north of 7% and maybe most importantly, have a dividend safety score as safe, which means the likelihood of a dividend cuts or anything of the sorts is very unlikely in the future. Now stick around, drop a like down below and subscribe for more future content like this, and let's get into it. Now when it comes to investing into either stocks or ETFs that are yielding, let's say, north of 7%, for the most part a lot of these different names could be looked at as dividend traps. Now this is basically where different stocks or ETFs sort of fool investors into investing into them in the hopes for massive amounts of cash flow. But what investors figure out long term is that some of these different stocks and or ETFs can be hit with major share price decay, which can make the overall investment not even worth it. Or of course, maybe even worse, some of these different names could be hit with dividend cuts. Now that's exactly why in this video we're going to be going through and analyzing different high yielding stocks that are yielding north of 7%, but also have their dividends rated as safe on the dividend safety score, which means that for the most part they shouldn't be getting cut anytime soon here, although of course as you and I know, anything can happen in the stock market. Now the first dividend paying stock that's yielding well north of 7% and also has a 70 on the dividend safety score, which means the dividend should be safe at least for a while now, is ticker symbol VZ or Verizon. Now Verizon actually happens to be one of my personal largest holdings. I own well over 1,000 shares of Verizon throughout my portfolios, and just like most of you holding on to Verizon, I'm down quite a bit. Verizon's down 23% year to date, and even looking at the max time frame, Verizon as a stock has not performed well whatsoever. But with Verizon's most recent performance, a lot of investors are thinking that most of the worst is behind us and that there might be no way that Verizon drops much more from here. Now on top of that, Verizon does have a well over 8% starting dividend yield and just as of recently even raised the dividend to 67 cents per share per quarter. So even though Verizon is a stock that's currently riddled with some debts and of course is in sort of an industry that a lot of investors are trying to stay away from, Verizon has still raised their dividend on a consistent basis and will hopefully do so for years to come. The next stock that's yielding well over 7%, actually 8.45% to be exact, is Enbridge or ticker symbol EMB. Now Enbridge is of course an oil and gas company and year to date is down 18.4%, but on the max time frame, Enbridge has performed pretty well, up around 354% plus. Now Enbridge has basically been flat over the last 5 years, but that's not anything to be too concerned about because the dividend that Enbridge offers is absolutely massive, with the quarter dividend payout being around 66 cents per share per quarter, and a long track record of paying dividends consistently. Enbridge definitely is a stock worth looking into and is actually one that I added a small portion to in my portfolio just as of recently. The next stock that's yielding over 7% and also has a safe dividend according to Simply Safe Dividends is DOC or Physicians Realty Trust. Now DOC is currently offering a 65 safe score on the dividend safety and a 7.88% starting dividend yield. Now I think it's important to note that if you look at DOC's dividend history, there's been really no dividend growth over the past 10 or so years. So if that's something that's important to you, which it's definitely important to me in most cases, DOC already probably wouldn't make up what you're looking for. But that being said, Physicians Realty Trust is down around 19.07% year to date and is basically flat on the all-time charts. So even though this stock does offer a nice sized dividend every single quarter, there really hasn't been much growth at all. Now as far as Physicians Realty Trust performance year to date, it's obviously going to have a lot to do with the entire real estate industry and what's going on over there. But that being said, if in the next few quarters rates continue to get paused or maybe even cut from here, we could see an absolute blast off from every single REIT across the board, at least is what I'm hoping for. The next stock that's yielding north of 7% and also offers a safe dividend at a 65 safe score is Enterprise Products Partners or EPD. Now in all honesty, EPD is probably my favorite single stock across the entire stock market. When we're talking high starting dividend yield, consistent dividend payouts over time, a decent amount of growth, and also a stock that offers a very safe dividend. Now looking a little bit deeper into EPD's performance, year to date it's up 11.35%, and on the max time frame, EPD is up 442%, which is pretty rare to see when you are talking stocks or even ETFs that offer a starting dividend yield of around 8+%. Now looking at EPD's dividend growth, it's been pretty substantial. Considering around 10 years ago, the quarterly dividend payout was around 35 cents per share, now at 50 cents per share within the last 10 years, And keep in mind, normally the dividend growth rate is going to be a little bit slower when you're talking a stock in this industry, as well as a stock that has a starting dividend yield at this high. Now, out of all the different stocks we went through so far, EPD is definitely the largest holding throughout my portfolio right now. I think I own over 500 or 600 shares as of right now, and I've owned EPD for many, many years now. But it's not all good. EPD is currently trading towards the higher end of the 52-week range, and because oil is still sitting so high right now, I do fear that EPD will pull back pretty significantly if oil, of course, does retreat, which in that case, in the 24s, I'll probably be buying more EPD personally. Now, the last single stock that's yielding north of 7% and also offers a 62 on the SAFE score for dividend safety is Main Street Capital, or ticker symbol MAIN. Now, Main Street Capital has had a great few years of performance, up around 9.4% year to date, but on the max time frame up 237%. And Main Street Capital is by no means a growth stock. This stock is mostly popular because it offers a massive monthly dividend. Main currently offers a forward dividend yield of around 7.15%. And as we talked about earlier, the dividend is considered safe. Now, even though Main Street Capital doesn't offer that much dividend growth, there have been actually some significant, meaningful supplemental dividends that are paid to shareholders in the type of special dividend, which definitely bumps up the dividend on a yearly basis quite a bit. Now, I've talked about Main in previous videos, but definitely look into Main Street Capital if you haven't already, because honestly, Main Street Capital might be the perfect stock for an investor that favors some growth, but also favors high amounts of cash flow paid out on a monthly basis. Main Street Capital might be the perfect stock for you. So there we have it. Those are 5 different single stocks that are currently yielding over 7% as of right now, and that all offer quote unquote a safe dividend. Now, a quick note when it comes to dividend safety, things can of course turn in a blink of an eye. Take WP Carey, for example, a real estate investment trust that I've owned for years now, which seemed not all that long ago to have a very safe dividend at a 73 safety score, all until the REIT surprised investors by announcing that it would divest its entire portfolio of offices in a massive up-and-coming spinoff, not only causing WP Carey's stock to drop, but also basically saying that the dividend is going to be cut in some way, shape, or form in the future. So I say this all as a warning to all the dividend investors out there, including myself. Keep in mind that just because a stock or even an ETF is currently yielding 5, 6, 7, 8, 9, 10, 20, 30%, whatever it might be, and just because as of right now the dividend might be safe, take it from someone like me that's actually lived through multiple different dividend cuts, holding onto a massive amount of shares and expecting a consistent amount of income from dividends just to see the dividends cut right in front of your eyes is not a fun time. So take it with a word of caution, do your own research, of course, do your own DD, and best of luck when it comes to your investing. But now going back to the 5 stocks we went through in this video, between Verizon, between Enbridge, between DOC, EPD, and Main Street Capital. If you could only hold on to one of these, north of 7% yielders with a more than safe dividend score, which stock would it be and why? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.